All right, everybody, it's me, Gregory Manarino. It is still Monday, September 23rd, 2019. And when I tell you this time we have to talk, I mean it. If this particular video blog doesn't blow your mind, well, I don't know what will moving forward here. That's the truth. People, we are on the threshold of something absolutely monumental. And if you notice, this says blank. Why does it say blank there? Well, I don't want to put any ideas in your head. I want you to listen to this video blog, and I want you to make up your own mind, use your own intellect to put a perspective on what you believe is about to happen. Here we go. Let's start off with the basics. Stocks were all over the place today. With regard to the Dow Jones Industrial Average, we had a triple-digit loss, a triple-digit gain. The real action was in the bond market. An epic amount of bond buying this morning. I mean, off the Richter scale, which seemed to calm down throughout the day. How did stocks end? The Dow Jones Industrial Average finished essentially flat with a fractional gain. S&P 500 in the negative, NASDAQ in the negative. Okay, that's all well and good. What's underlying this entire thing? I want to read something to you, and I'm going to, as a matter of fact, what I'm about to read to you is so important. I'm going to place a link in the description of this video, and I want you to read it for yourself. I don't want you to think Greg is making stuff up. I know you don't, but here we go. Let's do this. This statement, what I'm reading to you here, is from the Federal Reserve Bank of New York. Okay? Bear with me here. I'm just going to read a little bit, but it is really important. Statement regarding repurchase operations. We know, you and me, and it's pretty much public knowledge, the Federal Reserve has decided to issue massive capital injections into the financial sector to stabilize the debt market and to recapitalize the banks. That alone should tell you that something is very, very wrong. Now, when I read more of this to you, I'm sure you will agree. Again, this is from the Federal Reserve Bank of New York. Operating policy statement regarding repurchase operations dated September 20, 2019. In accordance with the Federal Open Market Committee, FOMC, directive issued September 18, 2019, the Open Market Trading Desk, in brackets, the desk, at the Federal Reserve Bank of New York will conduct a series of overnight and term repurchase agreement, repo, in brackets, operations to help maintain the federal funds rate within the target range. Okay, so what did we learn here from this statement? The Federal Reserve, number one, is admitting that they have a trading desk. It's called the desk. The reason why I'm bringing this up especially is because I've mentioned this for years. I have taken flack from people who have called me straight out a liar. Greg, you are a liar. The Federal Reserve does not have a trading desk. Well, right here on this statement, read it for yourself. It's called the desk, okay? They have a desk. Now, what most people don't understand, and again, I'm going right off of this paper, right from the Federal Reserve Bank of New York. So, again, it's common knowledge. Beginning on Monday, the 23rd of this month, the Federal Reserve started with a $75 billion capital injection bailout for the banks, plural. The same banks which run them. We understand that. Now, what people don't understand, starting the 24th right through till today, and it will continue until October 10th, pay attention to this. The Federal Reserve is saying that they will, again, issue these capital injections. However, there is no cap. At least $75 billion per day. At least. Look at this for yourself. And again, this will continue until the 10th of next month. Now, the question is very simple. I don't think anyone's talking about it. What happens after that? The Federal Reserve right now is doing a mirror image of what they did during the financial crisis. Massive capital injections into the system just to keep it afloat. And this should tell you something, that once the Fed stops, again, there's no cap here, at least 75 billion per day. It's going to continue for a while, till the 10th of next month. What happens when they stop? I believe sincerely that there is the potential for the bond market to have a fit like you have no idea. Again, if you follow this blog, you know better than anybody else, probably period, anywhere, that this market, and I'm not just talking about the stock market, because everything is getting valued off of what's happening in the debt market, okay? It's a bubble beyond. So, the debt market here is an addict. It's demanding that more debt be printed out of thin air, added to a digital screen to prop it up. This is keeping stocks inflated. This is keeping the housing bubble inflated. This has manifested itself in a multiple bubble environment like we have never seen. There's nothing like this before. So what the Federal Reserve, I assume, wants you to believe that after these capital injections, no cap, all the way through till the 10th, once they stop, everything's going to be just fine. How many of you would be willing to bet that that's not the case at all? Yeah, exactly. Probably every single one of you who follow this blog. The Federal Reserve is going to automatically just stop feeding the beast, feeding this monster. That's what it is. The debt bubble is a financial Frankenstein, unlike anything the world has ever seen before. On the back of that, we've seen the reinflating of a stock market bubble and a housing bubble. And all this is a massive setup for a transfer of wealth on an unprecedented scale. Now, we also understand that we are going to get rate cuts, more than likely zero or in the negative, if our president gets his wish. What does that mean? Massive debt expansion, again, on a scale that we have never seen before, just like I explained to you what happened from a very, very long time ago. So, and I want to leave you off with this. Now that we understand, or at least we have somewhat of an understanding, we don't know what the Federal Reserve is actually doing. We know that right now, today, there's going to be at least $75 billion capital injection today. At least $75 billion. It could be $100 billion. It could be $500 billion. We don't know. Okay? Whatever they want it to be today, that's what it could be. They have no cap. They're going to continue this all the way through until the 10th. And then after that, what happens? Do we fall into the abyss? Again, the monster must be fed. And this is what we're seeing. It's the market demanding that it be fed. Now, talking about the market being fed, how about we heard from Fed President Bullard today. What he said was very interesting. If you know about Bullard, he was one of the people that was calling for a 50 basis point cut to the federal funds rate. We got 25. Bullard is saying that the market, the stock market, is going to demand more debt issuance. Really? I think Mr. Bullard is way behind the curve, because I know that you knew that way before Bullard had to have it come out of his mouth. And how did you know that? Because I've been explaining this to you. And pretty much everything I've been explaining to you is actually happening. So what we need to be thinking about here, people, is what happens after the 10th when the Federal Reserve supposedly ends their massive capital injections, their bank bailouts. Let me ask you, who gives them the right to have a blank check right now? Do you hear a single member of Congress talking about this? Do you hear the President of the United States saying, hold on a second, this is the people's money? So how is the Federal Reserve allowed to do what they're doing right now? Again, We do not have a free market. Could you imagine if the Federal Reserve were not doing what they're doing right now? What do you think the debt market would be doing? It's very simple. It would be determining fair value on its own. It's not allowed to do that. That's why the Federal Reserve is doing what it's doing right now, massive capital injections, at least $75 billion per day. If the market were allowed to dictate fair value, no one on this planet is smart enough to know where yields would be, and subsequently what the stock market would be doing right now. I'm gonna speculate out here. If the Federal Reserve did not step in on the 23rd of last month with these massive capital injections, and the debt market were allowed to set fair value for debt, and it were not being artificially suppressed, we would have seen rates spike at an unprecedented pace. And what would that have done? It would have cut the stock market in half since the 23rd. You're not supposed to know that, but that's where we would be right now today. So, knowing what I just said, I want you to think about, like I started this video off, I want you to think about these things on your own. What's going to happen, or what do you believe is going to happen after the 10th when the Fed stops their capital injections with their blank check that's been given to them by you? I want you to think about that. It's on your back. All this debt, you own it. Your children own it. It's being piled on right now, and not one politician, especially not the president, will say that maybe we should rein some of the spending in. Oh no. That's because the stock market must be propped up at all costs. And you are going to subsidize it no matter how loud you scream or cry. You must support the debt. You must bear the burden of this. Your children have no choice. None. Zero. I want you to think about that. And you will be forced to subsidize this stock market until the breaking point. And when it breaks, your investment plans, your 401ks, whatever makes money on the long end of this market is going to be legally stolen as the Wall Street banks that are now being recapitalized short the entire market, just like the guy you're looking at here. So you're hearing it from the horse's mouth, okay? That cash is going to be removed, legally stolen from your account and transferred to the Wall Street banks and to guys like me. I know you like me. I really do. But I don't think you like me that much, and I'm not the only one that's going to benefit here, because that is what's being set up, and you're hearing it from a guy who will be on the opposite side of that trade. So you are being set up. You are a pawn in a very dangerous game, and maybe a fraction of 1% of you has the guts to speak out about it, to maybe share this video, to maybe start a blog, to maybe tweet the president, or something. And that's really a shame. That's the shame of this whole thing. Because people have been silenced. And that's a damn travesty, in my view, that people just allow these things to happen to them. Again, there are ways to take advantage of it. Bet against the debt. Become your own central bank. Hold a hard asset. We know what they're doing right now. It's not going to stop. In one way or the other, they're going to keep it going until we hit a wall. Until we literally hit a wall and this thing reverses so hard, so fast. Like I just said. If the Federal Reserve were not doing this since the 23rd, and they allowed the debt market to determine fair value, because that's, you have to understand, the job of all of these markets, whether it's the debt market, whether it's the stock market, whether it's the housing market, whether it's the currency market, whether it's precious metals, which you know are rigged to the nth degree, cryptocurrencies, all of them, they have one job: to determine fair value. If you have an entity like the Federal Reserve, or any world central bank, doing what our Federal Reserve is doing right now, how can we have a real market? How can there be a price discovery mechanism behind a single asset? If you and I both know that every asset on the planet right now derives value from what's happening in the debt market. Again, the debt market really does set the price action of every single other asset. So, if we understand that there is no price discovery whatsoever in the debt market, how can a single asset be real? How can any aspect of this market whatsoever be real? I want you to think about that. I'm going to let you go. I think this video has been exceedingly important. In fact, probably one of my most important ever. Please share it. Get it out there. I'm counting on you. If you're part of my team, I am depending on you to share this video. This guy loves you a lot. I'll see you in the morning.